This ICT silver bullet strategy would have made a total profit of 46% if you were to trade it from the beginning of January 2024 all the way to the 12th of March 2024. This is an average profit of about 19% every single month, which is pretty fantastic. In this video, we're gonna go over what this strategy is, all the indicators needed to make it work, as well as the entry and exit conditions. Stay tuned to the end of the video because we're also going to reveal other details about the backtesting that we did. Things like the number of trades taken, the win rate of this strategy, the maximum drawdown, etc. If you happen to find value in this video, remember to leave a like. Let's get into it. Now, the main indicator of this strategy is called ICT Silver Bullet. To add it to your chart, you're gonna go to TradingView, which is the trading platform that I'm gonna be using. If you need to sign up, the link for that will be in the video description. Next, you wanna load the 5-minute time frame of GBP JPY, but you're not limited to this. You can actually use any trading security that you like, as long as the time frame is 15 minutes or under. But for now, we're gonna go with the 5-minute time frame of GBP JPY. After that, click on indicators so we can look for this indicator. Type in ICT Silver Bullet, this one by Lux Algo. Now, the Silver Bullet indicator by Lux Algo is designed based on a concept from ICT. This indicator focuses on identifying and utilizing fair value gaps that form within specific 1-hour intervals known as silver bullet windows. These windows are predetermined times when the market shows potential for significant price movement, and the indicator aims to capture these opportunities by highlighting potential support and resistance levels as well as fair value gaps that traders can use. Now, let's go over this indicator's components. So this indicator is actually really simple. It's composed of only 3 elements: the silver bullet windows, bullish and bearish fair value gaps, and the support and resistance lines. So these red lines at the bottom are the support lines, and these blue lines at the top are the resistance lines. And then this area in between these 2 gray lines is the silver bullet window, or SB window. Every day, there's going to be 3 different silver bullet windows. As you can see from the settings, the first SB window is going to be from 3 a.m. to 4 a.m., which is this one. And then we have the 10 a.m. to 11 a.m. one, which is going to be this one. And the last SB window is going to be from 2 p.m. to 3 p.m. The time zone used by this indicator is actually New York local time. So 3 a.m. to 4 a.m. would be the first 1 hour of the London session. And then 10 a.m. to 11 a.m. is the New York session. And then 2 p.m. to 3 p.m. is also during the New York session. Then lastly, this is a bullish fair value gap. And this is a bearish fair value gap. Now, looking at the settings of this indicator, we can see that you can actually disable the labeling for the different silver bullet times by unchecking any of these boxes. And then here, we want to disable the target high as well as the target low. Then head over to the inputs tab. Then here, we have the swing settings. We're not going to be looking at this because this is only going to be needed if we were to activate the trend option, which is just going to use zigzag patterns to identify the trend. We're going to disable this, which is going to make this number irrelevant because we're going to be using a different indicator to identify the trend. And then this option is going to allow you to show or hide the silver bullet sessions. And then here you can choose to select either showing all FVGs or only FVGs in the same direction of the trend. You could restrict it even more, but for this video, I'm going to stick with super strict. This is going to filter out the majority of the FVGs using some specific criteria and only produce FVGs that have a higher chance of producing profitable trades. We'll also need to disable these support and resistance levels because we don't need them. For that, we're going to uncheck the keep lines option. After that, click OK. Now, at this point in time, I know you may be thinking,
but how can we use this indicator to trade?
Well, I'm gonna tell you. But before that, let's talk about the forex broker called Fintura. I've been using Fintura for quite some time. As you can see here, this is my live account on MT4. Yes, MT4 is the trading platform used by Fintura. The reason why I think Fintura is a great broker is because of their low commissions as well as spreads that go as low as 0.0 pips. They also have a maximum leverage of 1 to 500. You know, for those of us who love high leverage. If all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $50,000. So if you deposit, say, $5,000, they're going to give you a bonus of $5,000, giving you a total of $10,000 to trade with. To access the bonus as well as all the other perks, sign up to Fintura using the link in the video description. Now, back to the video. So how do we use this indicator to trade? Well, it's actually really simple. First, identify a silver bullet window marked by a gray vertical line like this one. Next, you're going to look for a bullish fair value gap, which will be represented by a light blue rectangle like this one. Now, once the fair value gap is identified, the next step is going to be to wait for the price to retest that gap. A retest is going to be confirmed by the appearance of at least one bearish or red candle that either touches this level with its wick or closes inside the fair value gap, provided it doesn't close below the gap. So like here, this red candle did the retest. After the retest, you're gonna wait for a bullish continuation signal, indicated by a bullish or a green candle. If the following candle is also red, we're just gonna be patient until a green candle appears. This green candle signifies our entry point. And yes, to take a short position, we're gonna do the opposite of this. But of course, if you were to backtest this strategy only using this single indicator, you will realize that it would actually be a losing strategy because there would be lots of false signals produced when the market is ranging. To fix this issue and turn this from a losing strategy to a profitable strategy, we would need to add just one more indicator to the chart. Open the indicator search tab and look for an indicator called 7EMA_5MA. This one by Storewise. Then double click on it so we can change some settings. On the inputs tab, you want to change the length for EMA1 to 8. EMA2 length is going to be 13, EMA3 is 21, and EMA4 is 34. Then on the style tab, you want to change the EMA1 color to green, EMA2 color to blue, EMA3 color to orange, and EMA4 color to red. After that, disable the rest of these EMAs, so you're only going to be left with the first 4 EMAs. After that, click OK. Now, we're going to be using these 4 EMAs. Well, actually, the 4 EMAs are under one indicator, so you don't need to worry about being on a free version of TradingView and being limited to only 2 indicators. So we're going to be using these 4 EMAs under the single indicator to identify bullish and bearish trends in the market. So to identify a bullish trend, these 4 EMAs would need to be aligned like this. This is a bullish trend. And then the opposite of this, which is this, indicates a bearish trend. Now, let's go over the conditions for taking trades. To take a long position, the first condition is to identify that we're trading during a silver bullet window. That is going to be indicated by this gray vertical line from the ICT silver bullet indicator. Condition number 2 is to identify a bullish fair value gap. For that, we're going to be looking for a light blue rectangle like this one to be printed by the ICT silver bullet indicator. Now, after we have the gap, the third condition is to wait for the price to come back and retest the gap. Let's see if that happens. This green candle is going to be our retest candle because, as you can see, it did touch our fair value gap after a series of red candles. So this becomes our entry candle. The last condition is to confirm that the price is in a bullish trend at the time our entry candle is printed. For that, we just make sure that on this last candle, these EMAs are aligned in such a way that the green one is at the top, followed by the blue one, and then the orange one, and the red one. This indicates a bullish trend. All our entry conditions are met on this candle. So we're gonna enter a long position here. We're going to set our stop loss right below the fair value gap, or if this wick were to extend way below the gap, we would set it under that wick. For this particular trade example, we're going to set it under the gap. And for the take profit, we're going to go with 1.5 times the risk, letting the trade run and take profit. Now, to take a short position, we're gonna do the opposite of everything we did for the long position. Well, maybe not the opposite of every condition, but the opposite of every condition except the very first condition. Let's see what I mean. So, condition number 1 is to identify that we're trading during a silver bullet window. That is gonna be indicated by this gray vertical line from the ICT silver bullet indicator. Condition number 2 is to identify a bearish fair value gap. For that, we're going to be looking for a light red rectangle like this one to be printed by the ICT silver bullet indicator. Now, after we have the gap, the third condition is to wait for the price to come back and retest the gap. Let's see if that happens. This green candle is going to be our retest candle because, as you can see, it did touch our fair value gap after a series of red candles. So this becomes our entry candle. Now, the last condition is to confirm that the price is in a bearish trend at the time our entry candle is printed. For that, we just make sure that on this last candle, these EMAs are aligned in such a way that the red one is at the top, followed by the orange one, and then the blue one, and at the bottom should be the green EMA. This indicates a bearish trend. All our entry conditions are actually met on this candle, so we're gonna enter a short position. We're gonna set our stop loss right above the fair value gap, and for the take profit, we're gonna go with 1.5 times the risk, letting the trade run and take profit. Now let's take a look at how this strategy performed after we backtested it for 2.5 months, beginning from the 2nd of January 2024 all the way to the 12th of March 2024. We assumed a risk of 2% for every loss and a 3% win for every profitable trade, giving us a risk-reward ratio of 1 to 1.5, as you can see right here. We had a win rate of 67.86%. The gain on the account was 46.2%, which means if you were to trade with a 100k account, this is the profit that you would have made. The total trades taken during the backtesting period were 28, which we had 19 wins and 9 losses. The profit factor was 3.17. Maximum consecutive wins were 5 and the consecutive losses were only 3. And as you can see, the maximum drawdown was just under 6%, which is really good. Now remember, we only backtested this strategy for roughly 2.5 months, where we took only 28 trades. While it looks good and profitable, you would need to do further research, backtesting and forward testing to see what other conditions you can add to make it super profitable. If you have any questions about this specific strategy or any of the indicators used in this video, let us know in the comment section below. Well, that's basically it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.